Greetings, ladies and gentlemen. Welcome. I am the CryptoCrow. Now imagine this. Just last week, global crypto exchange traded funds sucked in a record $5.9 billion. Yes, billion with a B. In investor money, propelling Bitcoin to a fresh all-time high above 125,000 and then 126. That's not pocket change. That's the kind of flood that can reshape entire markets overnight. If you're holding your breath for what's next in the altcoin world, like Cardano, buckle up. Today, we're diving into how these ETF inflows are supercharging crypto and what it could mean for the supply of assets like ADA when their own ETFs finally hit the scene. First, what exactly are these crypto ETFs and why are they causing such a stir? Picture an ETF as a basket of stocks you can buy and sell like a single share on the market. Easy access for everyday investors who don't want to mess with crypto wallets or exchanges or any of that. For Bitcoin and Ethereum, spot ETFs launched over a year ago, letting big institutions pour cash straight into the actual coins without any of the hassle. Take Bitcoin, US spot ETFs alone raked in $3.24 billion just in the week ending on October 3rd, with BlackRock's iShares Bitcoin Trust leading the charge at nearly $1 billion on some days. Ethereum's not far behind, clocking $420 million in inflows on October 7th alone. This isn't speculative hype, it's real money from pensions, hedge funds, and neighbors' 401ks, driving demand sky high. Now, point number two, how do these inflows actually squeeze the supply of the underlying assets? It's basic economics. Demand up, supply tight, prices climb. When an ETF gets an inflow, say $100 million, the fund managers don't sit on cash. They go out and they buy that much Bitcoin or Ethereum on the open market, basically spot trades. This pulls coins off of the exchanges and puts them into secure vaults, reducing the floating supply available for trading. Think of it like draining water from a pool. The level drops, but if folks keep jumping in to buy, the pressure builds fast. A perfect example, right after Bitcoin ETFs launched, we saw over $15 billion in net inflows in the first few months, which helped Bitcoin surge from around $40,000 to over $70,000 by mid-year. That buying frenzy locked up about 1% of Bitcoin's total supply in ETF holdings, making every remaining coin feel scarcer. Ethereum followed suit, with Ethereum ETFs absorbing millions daily, tightening supply and fueling its rally to new highs this fall. It's not magic, it's just institutions finally getting into the game and the market's rewarding them with momentum. Point three, when ETFs launch for altcoins like ADA, expect the same supply crunch, but amplified, because these networks start with less institutional liquidity. Cardano's sitting pretty at around 82 cents right now, up a solid 13% over the past week amid broader market gains, but it's still down from its peaks. Why? Limited big money access until now. Enter the ETF hype. The SEC's eyeing decisions on proposals like Grayscale's Cardano trust conversion with a key deadline that just passed on October 7th. It's been extended to the end of this month. If approved, and analysts are buzzing with optimism for quarter four, this could unlock billions of dollars in fresh capital. Imagine $500 million flowing into a Cardano ETF on day one, which it likely will. Fund managers scoop up ADA from the market, vaulting it away, which could slash circulating supply by 5% or more in just weeks. We've seen it with Solana filing, stirring buzz. Sol jumped 20% just on rumor alone. For Cardano, with its proof of stake efficiency and growing ecosystem, hitting over 1 million transactions in the last month, that reduced supply could ignite a rally, potentially pushing ADA towards $2 or even higher by the year's end, mirroring how Ethereum ETFs boosted at 30% post-launch. One more angle, point four, the ripple effects on the broader ecosystem. ETF inflows don't just jump or pump prices, they validate the tech. For Cardano, approvals signal to institutions that ADA's ready for prime time. Think more developer grants, more partnerships, and more adoption in DeFi or real world apps like supply chain tracking or identity. But here's the simple example. Remember GameStop in 2021? Retail frenzy met institutional buying and supply dried up fast, sending shares parabolic. Crypto's similar, but with ETFs, it's regulated firepower. If Cardano's ETFs greenlight, which I do believe they will very soon, expect not just supply squeezes, but a flywheel. Higher prices draw more inflows, which tighten supply further, rinse and repeat. Of course, risks like regulatory hiccups exist, but the trend's clear. ETFs are the on-ramp, turning crypto from Wild West to Wall Street staple. So that's your play. If you're eyeing Cardano or similar altcoins, now's the time to research. Stake if it fits your risk and watch those SEC filings like a hawk. If you like this kind of thing, drop a comment down below and let me know, do you think ADA is going to hit $1 before Christmas? What about by the end of this month? I think it's probably likely, but we're going to find out very soon. If you like this content, make sure you subscribe to the channel and drop your comment down below, and I'll definitely try to respond. Until next time, crow your coins. Thank you for joining me, and I'll see you again soon.